the ECB decided to raise interest rates by 25 basis points, but there was a new line introduced. The ECB considers that interest rates have reached levels that, maintained for sufficiently long duration, will make a substantial contribution to timely return of inflation to target. Let me tell you, almost every analyst out there read that line and said the ECB are done. Is the cycle over, the hiking cycle?
Well, you could read this line as it is, but I think what we wanted to express it, that if everything goes well, this may happen, but, and I think this also was behind it, if additional shocks come, and if the information we have proves to be incorrect, we may have to hike another time or perhaps 2 times. And so, and that's also a message given to the market, don't start to talk about when will the first decrease. We are still in a period in which we don't know how long it will take to come to the inflation we want to have, and whether we have to hike more.
But we are beginning to see a sequential monthly decline in core inflation numbers. Why would you still say that there's an upside risk to inflation? Well,
I'm sure if you look around the world, we have just seen in recent days, the uncertainty was high, and due to the recent events will further increase. And what we also know is that even as we have disturbances, oil prices are likely to go up again, and there may be other disturbances. So yes, if it comes down as it does, we're on the good path. But we also know from research done by the IMF and published recently, comparing about 100 stories about inflation, if you're not careful, if you think you have it, then it becomes dangerous, because then inflation may re-rise again.
So you just brought up oil. I'm curious to see how you're thinking about the impact of higher oil prices, because there's a view out there that it could be perceived to be a demand shock, so that is not a good thing for the European economy, but equally a supply shock, because it means that prices are going to start moving higher. How does the ECB read the impact of higher oil prices?
Well, I can't speak for the whole ECB, I can speak for myself. Is oil prices always have the supply and demand shock elements there. But what we know is that the oil price is a major signal for the whole energy market. So if and as oil prices were to be increased by a substantial amount, this would scatter through the whole energy system and will create something which may be another shock to the price system.
Let me ask you about wage pressures. Are you seeing enough momentum there again to be concerned about second round effects?
Well, the first question is, we haven't seen yet the full first round effects. If I take Austria, we still have negotiations of the metal workers, the most important ones like in Germany, and the started negotiations, and they came in with a request for 11.6%. So if this were to happen at this would be a major, major shock in the first round, even further on the second round. So we don't have yet all the discussions ready, and they will lead into the next year. So the first round effects as well as the second round effects, we don't know. But what we have seen is that while in 22 and the first half of 23, we had a major effect of very high profit shares increases, we see now that the effect of wage increases on the prices is on the rise. And what this would mean then in the second round, this is still to be seen.